Okay guys, so welcome to Wealth Wizards meeting 2. Since last time, I'm pretty sure that whatever I talked about went over a lot of people's heads. We're just going to go over the basics today. And originally we were gonna analyze stocks, but we're just going to go over the basics today. Okay. So these are the different things you can invest in. You can invest in houses, gold, cryptocurrency, bonds, but this club mainly focuses on stocks. And whenever you want to invest into a stock, instead of thinking about it like you're investing in like a stock, think about it like you're going to invest in a company. So like, would you invest in that company? And if not, then that stock is probably a bad idea. Okay, so real estate is basically investing in houses and buildings and hoping that they'll grow in value soon. Gold. Some people invest in gold because gold just has value, and like if the market crashes or like the dollar devalues, then people with gold might use that as a currency. And cryptocurrency is basically a virtual currency and is traded on the blockchain. And a big pro of cryptocurrency is that it's not controlled by the government. Yep.
Can you elaborate on what the best choices of real estate are?
The best choices of real estate?
Like locations.
Best locations of real estate? Well, I actually don't know much about investing in real estate. I'm just saying that you can invest in real estate. So yeah, I'm not an expert in real estate. Okay, and bonds are basically loans that you give to big companies. So like you pay Microsoft $100 and in like a month they'll pay you back $110.
What was the question about real estate?
He asked, what are some good places to buy real estate in? Okay.
Yeah, you have to do research to figure out if you think
Yeah.
it will grow or not grow.
You guys are late.
You had your food.
Oh, okay.
You saw it from both.
Okay, yeah, so basically we just went over of the different types of things you can invest in, like real estate, gold, cryptocurrency, and bonds. So does anyone have any questions on what those are? Okay. Okay, so buying shares of a company. A share is basically a portion of a company. So like if a company has 10 shares and you buy one share, it means you own 10% of the company. And the reason why companies sell their shares is to raise revenue. So like if a company needs money to run its operations, then it'll probably sell its shares to investors. Okay, yeah, so if you buy a share, then you partly own a company. And if the company value increases, then so does the value of the share. And sometimes companies pay dividends. So like they usually pay it quarterly. So like if the stock you bought costs $100 and the dividend is 5%, then you'll probably get $5 on dividend payouts. Any questions? Okay, so buying shares. So for example, if you bought 5 shares and each of them are worth $10, and then the price of each share increases to $15, it means you made $25 because each share increased by $5 and you have 5 of them. So $5 increased value times 5, since you had 5 shares, is $25. And the way how the stock market works is that you can buy shares from people who are willing to sell them. And the way how the price of a share goes up and down is with supply and demand. Like if there's more people willing to buy a share than people who sell it, the people who are willing to buy it will probably increase their price to get more shares, and then the company value will increase since there are more people buying than selling. Okay, yeah. Any questions? Okay, so here are the different investing strategies. Value investing is what most people use, is just analyzing the intrinsic value of a company. And like, if you think the company will do well in the future, think of it as like investing in a company. And technical analysis, it's analyzing the chart to predict what's going to happen in the future. And this is actually a bad strategy because it's actually impossible to predict what a company will be worth in the future just based off its chart. And like technical analysts come up with the patterns like the upside down hammer. It's where it's a candlestick pattern with like a big like, well, it looks like this. Okay, anyway, just don't use technical analysis, it sucks. Okay, algorithmic trading is trading that's fully performed by a computer. So like a simple algorithm would be to like always make a sell price slightly above the current price and always make a limit buy price slightly below current price. And programmers usually work on these programs for algorithmic trading. Any questions? Okay. So these are some examples of each of these strategies. So this example here for algorithmic trading, this is a strategy that will place a sell order if the current price is a certain percentage above the 20-day average price, and it'll place a buy order if it's below the 20-day average price. This is basically a market making strategy. And this is technical analysis. So this is what I was talking about, an inverted hammer here. And they think that just because there's a candlestick like this, then the stock will go up. But this isn't really true. Like, you can't trust this. In value investing, you have to analyze all of these things from a company to make a good investing decision. Any questions? Yep.
Let's say PE ratio, BP ratio, all those.
Okay, so PE ratio, it's the price of a share divided by earnings per share. So like if a company earns $1,000 and has 10 shares, and each share is worth $10, then the PE ratio would just be 1 because it's 1 over 1. PB ratio is the price per share divided by the book value of a company per share, and the book value is just the price of all of its assets. The dividend yield is how much a company pays out its investors, usually quarterly. And the shares float is how much shares a company has. Revenue is how much a company makes in a year. And debt is just how much the company owes in a specific year. Okay, so next meeting, you guys can research a stock to invest in and make a presentation of why it's a good idea. And if someone does that, then they can present up here of why they think that's a good investment. So does anyone want to do that?
I'll do it.
Okay.
Possibly.
Okay.
I might have time.
Okay, yeah, so any questions about what we went over so far? Okay. Okay, guys, that's the end of our meeting for today.